99% probability that it's going to fill unless we drop real soon. This opening gap down here should fill real handily. Even though the basic ad stats are 69% in the ES, I'd say it's pretty much a sure thing this morning. Although this is the quarterly expiration, so that's the SOQ, special opening quotation. So crazy things can happen on this morning. This what used to be the quad witching morning, referred to as. Anyway, I'm looking for this gap to fill here, and now as the market moves up, you can see that percentage changes. Now it's 89%. It's going to fill. So the NQ is pretty similar. It's trading above one of my gold levels down here, this 24,444.25, and it should fill too. Right now it's a 61% probability of filling. They're showing the ES. Let me see, NQ. Put that back on here. NQ. Got the table messed up there a little bit. NQF. There we go. They're showing down 83. And I'm showing down 115 because I use a different settlement price. Anyway, this is likely to fill right now because it's trading above this gold level, this 24.44.25. So I'm as I say, I'm looking for those gaps to fill, and then we'll have to see how it trades. You can see overnight here the NASDAQ, the low was 24,319, which is just 9 points above my one standard deviation level for today, the -1 standard deviation level. So kind of around the standard deviation levels, you can expect support or resistance. Here's the ES. It actually went down and hit this 1440. That's that purple level. The low was 6627. Oh, wait, sorry. The low was 6607.75, and I had a purple level at 65.5 and an old gold level at 65.09, and then of course the 1SD level at negative at 65.98.85. So that is, let me check over here real quick. Morning, Yard. That is, as I said, I'm expecting these gaps to fill. After that, it's anyone's kind of guess. This is a quarterly expiration, so we'll see. And of course, it's all dependent on news in the Middle East and what oil does. So that will reveal itself later on today. Another thing I like to look at is Ichimoku. And I look at a 1440-minute chart. That's a 24-hour chart. And we've been trading sideways in a range from, down here in the 65, 25 area, up to the highs. And it can get kind of choppy when it trades like that. But it remains to be seen what takes place here. I'm still looking for a bullish outcome to this. That I think will eventually rally up, but it's hard to say. If this month And this is a really critical month. March is because it's the first quarter. The end. It'll mark the first quarter. So what happens in the next? What do we have here? We have next week and then a couple of more days. And if March ends up negative and we end up down on the year, from a probability standpoint, it actually changes the probability that the year could be down. It goes to 52% of the years. If the first quarter is down, 52% of the years are up, and 48% of the years are down. So it's and if the first quarter is up, 88% of the years end up. And my data goes back to 1970. So it's 56 going on 57 years of data. So if this first quarter is up, it more than likely will end up being an up year. If the first quarter is down, morning T-Bond, it will more than likely, it becomes a 50-50 proposition. And I do some conditional formatting to like look and see, how what I believe how the year will unravel. Even if this month is up, I'm expecting September or October. One of those 2 months is going to be a down month, and I can already tell that from some of the stuff that I look at. And I think that's pretty much a certainty in my book. Morning, T-Bond. I was working on the stats, and I didn't. I was updating them, and I was one of my guys in my room asked me if I have stats on the March expiration. I can look at those for a second and see. I didn't get to. There's other stuff I had to add to get to December. The last expiration, and that was December. So I actually looked at them without having the December stats in. And this is the March stats. I have to clean up this table a little bit. I meant to rework this last night, but I just had too much to do and couldn't get it done. But this database goes back to 2008. So that is about 18 quarters, I think, of March quarters of data that I have in here. And these numbers here represent whether each period here, whether there's a positive outcome or a negative outcome, basis being short the spread. So you can see, I got to look at this. Let me go back here and look at some of these other things, because I just put this in this morning and I didn't have a chance to get back in here and really, grab a hold and look at it. Set to open positive. And that was March. So there's 18. Hmm. 18.6. This is being short the spread, T-Bond. Short the spread only worked 6 out of those 18 times in the first 5 minutes, which means that basically the lead month opened higher and went higher in the first 5 minutes. So you can't be short the spread on the open in March, because chances are it's going to work against you. So that's what I'm saying here. And let's go look and see where that spread ended up last night. Go here to the stocks. Let's see what we're looking at here. That's crude. Let's go to. Let's put this in here. thought I had this in here. Let's see, ES, and let's see what time it is. It's 7:10. We have plenty of time. ES space H26 is minus ES space M26. Enter. Let's get rid of this window here. Edit this. I'll take that subchart out. Oh, I didn't get the space in here. Space ESH. Space ES space M6. There you go. You get your spaces right. So right now, the lead month contract, which is June, is trading 50.75 over the cash, and I'm expecting this to go up higher. In the opening. If you're short the spread, it means you're short the lead month, which is going to be June, and long the expiring month. And my stats tell me that the overall that has not worked in the first 5 minutes. It can work by the end of the day, but not in the first 5 minutes. So in the first 5 minutes, I'm going to expect this to move down here in the spread, which would mean that let's get this other contract up. Let's see if I can do that here in a separate page or a separate SH, ESM, Oracle. Let's look at this. Let's look at the expiring contract. ESH 26. Here's the expiring contract, and yesterday's cash settle was, let's see, go back and look and see what that cash was. I want to mark this real quick. Cash settled yesterday, 660649, 660649, 660649. Let's just put that on here. Edit 660649. So we're trading a little lower. That's where the cash settled yesterday. The current expiring contract, which goes off right at 9:30 when the market opens, this contract expires. The March contract expires, and that special opening quotation price is the opening price of all 500 stocks in the S&P. Whatever the first quote is, that's what they make that special opening quotation price at. So what you see as the cash open that you're used to and the special opening quotation price can be two different things. So and we'll take a look and see that. But right now, this was the cash close last night. The futures are trading down here below where that cash settlement was. So we'll watch that on the opening and see what the difference is. By the way, if you guys ever trade these expiring contracts, you know they go off to cash. So if you sell it, this was last night's cash settlement, but the actual cash settlement will be the SOQ, and that could be anywhere in here. So if you're long or short, you're in this expiring contract, your position is matched up against the cash settlement price. So if you're trading the spread, you will if you're short the spread, that would mean that you're long the expiring contract. It goes off to cash, and you're short the following, in this case, the June contract, and then you'd have to buy to cover the rest of the spread. So we'll see. This one doesn't particularly work that well in the first 5 minutes, at least. But some of the quarterly expirations, have a definite advantage to being short the spread. Normally, that being short the spread works overall, but not here early. And I have some more stats about whether it's trading lower, if that affects it, or whatnot. But we'll take a look at this again in a little bit. Let me go back here to the pit room. Morning, Dave. Morning, Niles. If anybody has any questions about that special opening quotation, there's actually a really good explanation of it on the CME website. Let me just go here real quick and I'll find that. By the way, the CBOE calls it SEC, but calls it this a special quotation receipt.
Hey, Niels.
There you go. So if you go to the CME website and just type in special opening quotation, you'll find out what these procedures are.
What is there?
And they've got excellent explanations about what it means. And this is how all these futures contracts, they all expire to cash. And this is how they figure out what that cash price is. And then later in the morning, they'll post that, and usually whoever you get your quotes from, they also provide it too. I get mine from eSignal, and they'll put that out there as soon as it's ready. But you should understand what this is. And, as I say, go here and check these out and read about them. And, there's a lot of good things to look at. The other thing I like to look at here, and I'm gonna do this real quick too. Besides that, let me get back here to CME, and let's go to data. I'll just show you where I'm going. CME has a lot of good stuff on futures and open interest and stuff like that. But if you go to CME data and the daily bulletin, this is something that I like to kind of keep track of from time to time. And that is, you can see right here that in the course of the rollover, there's usually a couple of million open interest. Right now, the June has got 1.85 million open, and it's been rolling down. But that means that coming in this morning, there was 13,000 came off yesterday. There's still 491,000 contracts that are expiring to cash that didn't get taken off or liquidated before. So these things will be going to cash, and that's all part of this huge expiration that Danny talks about. There's an AM expiration for the futures and some AM options. And then there's a PM expiration for the PM options. And there's all these stocks and all these options. I think Danny, if you're there and you hear me, that is. You know what? I got my speakers on mute here. I should turn that up. Let me turn that. That is. It's a huge expiration this time. Danny, you want to comment on that?
Well. That's like an extremely high level of futures that are expiring on the open. Can you hear me?
Yeah, I'm just turning my I need to turn
Well,
my volume up here.
I mean, usually it's down to like 180 to 225,000 or something. 250,000. I haven't seen that many futures go up. But now, what was that? What was the term you said? What is that called? The 80s?
The special opening quotation SOQ.
Yeah.
And what that quotation price is that is the opening price of all 500 stocks in the S&P. So it's the first trade in every stock. That's what they do. And like some stocks, I mean, they'll open at a price. I mean, liquid stocks may have 50 trades in a millisecond, but they take the very first trade on the opening of all 500 stocks, and that's how they calculate the expiration number, and then it's a cash settlement. So if you have a futures contract on and you're long, you subtract the whatever that cash settlement price is, and obviously if it's a positive, you're making money. If it's a negative, you're losing money. So
you can trade that spread, right? I mean,
you can trade. You absolutely can trade the spread. I used to trade the spread right up to the close, and that's what I was talking about.
I'm saying you could, like, right now you could trade. Did you do the study on the spread?
I have a study, and my study says that this March expiration in the first 5 minutes has been a winner only 6 times.
Being long the March.
No, being long the March and short the June. It hasn't worked as well in March as it does in some other months in the first 5 minutes. I tracked it through other time periods through the day, and I know what those are, but
the March expires and then you can't trade it anymore, right? I mean,
right. So when I say you're short the spread, it means you're long the March going into expiration and short the June. So if you carry it all the way to expiration, that means that your March contract expires, so you don't do anything. You can't take it off, and it goes to whatever that cash settlement price is. And then your June contract is the one you're short, and you have to buy it back at some point in time. So
which usually you do right away, don't you? I mean,
that's the theory. So that's why I was saying in the first 5 minutes, it has tended to be a losing trade to be short this spread. It has tended to be, and here's the March trading. Let's just put this here on the. We only have a few minutes left here. This is the March contract, and let's look at the spread too. Here's the spread. Actually, I'm going to put the spread on a 5-minute chart real quick. We'll look at this and see how you're going to see this thing start to trade crazy. I mean, it can make huge moves. This is right now. This is being short the spread. It would be you're long the March and short the June. So
Marty used to trade this all the time. There was another name for it that I can't remember what it was. We talked about that, but
I don't know. I've always just referred to it as being long or short the spread. And
so what you're banking on is you're banking on the March.
You're banking on that spread narrowing, meaning if you're long the March and the June at expiration, the June goes down, that spread will narrow. It'll go from 50 to, if you're short that spread, the June will go up here because that spread will get narrower. Because the June will go down in price and reach, if it gets to 0, it means the June, then you take the spread off at 0. It means the June, you're taking it off at the same price that the March expired. Right. So, right. But if this goes out, it means that the June has gone up in relation to the March. And what I'm saying here is that this spread, if it follows the traditional path, being short the spread, this spread will actually go, it'll go down. It'll become more negative. So and if you're short the spread, you would be see, look at that. This is craziness. Now you got this there was a $5-6. Oh, they took that bad tick out. See, we have 4
But
minutes here.
sometimes you can make a lot of money on the spread on the open.
Oh, you can make or lose a lot of money on the spread. Absolutely.
Now, what if the people would always buy it the day before? He wouldn't go charging it in the morning, right? I mean, is it better to put it on in the morning, or would you just?
If you're playing this spread, you can do it. You can do it at any time.
So you could do it right now. You could do it right now if you wanted to take that risk.
You could do it right now if you wanted to take that risk.
And you leg it. You just.
Well, you can leg it. If you leg it, you got to watch both sides. But if you're going to leg that spread, you got to get the March side off first, because that's the illiquid side. So if you're buying or selling the March, and we'll watch this. It'll be kind of interesting here going into the close. I got to watch a couple other things here too.
You have both the March and the June up.
No, I can put the June up here. Let's see. I just have the spread up here. Let's see here. Duplicate.
Yeah. Let's see how this goes. I mean, it's an interesting topic because, and then generally, like in the past, Rich, you would have to wait for the cash print, right?
You gotta wait for the. Well, you don't have to wait for the cash print. If you do this spread, you want to get out on the open.
Right.
Now, I have some other information that tells, like I look at these different time frames, and there's actually the spread works different throughout the day. With even though one side has stopped trading, it basically you're just long or short the other side, and I have a lot of data on how often it works being long or short the spread during different rollovers, because each rollover is different. We have the March quarterly, June quarterly, Sep quarterly, and these quarterly, and they all behave differently. And sometimes you can be short the spread and wait for a while, and it has a tendency to work even if it goes against you early on. But generally you want to be out as quick as possible. And
now, why is it that you have to? Well, on the floor, we would always, like all the banks, the hedge funds, everybody, they would be calling the desk. What's the print? What's the side? Why does that take longer to get?
Well, they're pretty quick with the S&P 500 now. They're really pretty quick. But sometimes, first of all, sometimes there's illiquid stocks in the S&P 500 that may not open for 3 or 4 minutes.
Yeah, okay.
On a quarterly expiration, so they can't put it out until every stock is open, and they have rules about if a stock doesn't open by a certain time, what they do. But the final cash settlement cannot be made until all those stocks have recorded the opening. Here we go. We have 1 minute, and this is where if you look at the March contract over here, sometimes you see some real screwy stuff happening.
We just
Yeah, there's the spread right there, and if that spread narrows, it's narrowing right now. That would it's open now. So the spread, even though it's open, this means right here, this is just calculating, the spread is now just calculating based on the June price. It's taken the last trade in the March, which was the March last trade price was right here at 65.93 half. And June right now is going down.
Yeah.
So June goes down. That means in this case, if you had been short the spread, you're short the June, so you're making money. Now, and if you were short the spread at 50 and you take it off at 45, you made 5 points. If you take it off at 43, you make 8 points, whatever,
Right.
From where it is.
And if the June keeps going down like it is right now, you make more money.
You make more money if you still have it on. But right now, the way this works is the spread went out. It was trading 50. It was trading 50 minus 51 minus 50 between 49 and 50. If you took it off, if you put it on right in here and took it off right here, you made a couple points. If you waited, you're making more points now because June's breaking. So,
no, it's an interesting trade. It really is. I mean,
it's and the vast majority of time being short the spread works. But I have all kinds of stats on what that's done over the years, and there's been some crazy ones. During the financial crisis, the spread traded like 200 handles on the open.
I remember that.
And if you were wrong, you lost a ton of money. But anyway, right now, if you had put the spread on, it's worth 10 points right now if you just took it off. And people play that spread. Now that's basis what this settlement price is here, but we don't know what that SOQ is. That SOQ could actually be higher, in which case you would make more money because you're long. If that SOQ turns out to be lower than this price,
well, you're long March, right?
You're long the March. So if the SOQ is lower than the settlement price, it will take away money. If it's higher, it will add money versus this. And this price, I'm assuming that SOQ it'll probably be out in the next 5 minutes. And here's June breaking some. So but
if you were holding the Junes, you're up 14 points.
Yeah, but you know how quickly that can change here.
I know.
But right now, yeah, you'd be up about 14 points right now, and of course that's without knowing what the SOQ is going to do. And that SOQ sometimes it can be. I've regularly seen them $5, $10, $15, even $20 different from where the price is, from where the cash price shows on the opening. Like right now, we're showing a cash opening price of the open is showing it's at 65. 94.66. And that's what I'm showing here. So it opened on the high and broke right away.
Yeah.
So lower than yesterday's settlement price, cash settlement price. I would assume. I'm assuming that the way this is, this cash opening is probably going to be. It's going to be higher than what the opening says. So if this says 65.94.66, which was the high and the open, I'm guessing that the cash open is going to be higher than that. It might even be 66 something.
So you made on both sides.
If it opens higher, you do. If it opens higher than this price here, and I'm assuming because of the way this opened that will be the case, but we won't know for a couple. We won't know for a little bit. And maybe I'm wrong, but that's just what I'm thinking. Let's see if we don't have anything yet. Well, let's see. Nothing yet. So
where do you get that print?
Well, I'm waiting. eSignal usually puts it out here. Otherwise, the CME puts it out eventually. The CBOE puts that print in.
We used to get it from the CBOE.
Yeah, I can go look at the CBOE. Let's see, CBOE.
I mean, I bet most people don't even know about this, Rich.
I don't know.
It's not something on everybody's shelf. That's for sure.
Well, it's an interesting. The one thing about the spread, Danny, and this, the spread is about the cost to carry, and when interest rates go up, that spread gets wider, and when they come down, it gets narrower. So it's also a way to play interest rates.
Right.
So
it's a big interest rate play. Right.
It's a big interest rate play. So if you expect a big move in interest rates, that's like higher, that spread will widen. So you want to be long the spread. If you think they're going to go down, you want to be short the spread, because current spread will now be the June SEP. We can take a look at that in a little bit. I was going to go.
Now, the volume that expired, that gets added back on as over a period of time.
I'm not sure that I understand exactly what you're.
I'm talking about 400,000 futures that expired on the open.
I used to know how they counted that and what they do with that, and I could read up on it again, but I haven't paid that much. Hold on one second. Let me see. Let's see if I can get this options. Let's do this. CBOE. And do this. Search. Let's see. I'm seeing if the CBOE does they don't have these March settlements out yet. So index settlement values.
Did you have any other studies that you did?
Not on this right now. I just have my main study, which I kind of showed a little bit of, and that's showing that being short the spread, and this is in the first 5 minutes.
Right.
It has not worked very often, but obviously today it worked. And then, I go into different time frames as to how often it works and what it is. I have a lot of stuff in this spread. I actually need to spend a little more time working on that. And let me go back here.
Can you pull up your sheet and talk about the standard deviations where we are?
Oh, yeah, I certainly can. The other thing I did say, and let's go. We'll go back here to this page here. I said there was a high probability that this gap would fill. Let's see, we got going here 60, and I still think this gap is going to fill. But we will have to see. Well, if at 10 o'clock, which is 20 minutes from now, if this settles above 66.3475, it will go back to the settlement. So if we start trading back above the 66.3475, this is going to go back to settlement. And the NASDAQ, let's see, the NASDAQ, which I also gave a high probability of filling this morning, but you always have to be careful on these quarterly expirations, because a lot of stuff can go out the window with the way it trades. And I'm still looking for the NASDAQ to go fill this gap. And let's look at my NASDAQ chart real quick, and then we'll look at my sheets. NASDAQ, same story here. If the NASDAQ trades back above this 24,444.25, which is only 40 points away at 10 o'clock, because this is my time fractal theory stuff. So if we're trading back above here at 10 o'clock, it will more than likely go up here to the settlement. And my gap stats said that it probably would trade higher and settle there. I'm looking at some other stuff here. I want to check something. Nothing there. Nothing there. And nothing there. Okay, so let me grab my sheets real quick, and I'll show you what Danny's talking about there.
Well, I didn't get a chance to look at Globex volume, but usually you get a huge amount of volume in the first open, and then you get gigantic volume in the first hour, right? I mean, that's always been that way.
On these, yeah. Anyway, these are my S&P sheets. I have some things I'm working on, but these are the standard deviation levels for today in the ES. That's the implied volatility that it was trading at on the close last night for the S&P. There's the SPX, and there's the SD levels and the NASDAQ index, the Russell, and the Dow. So keep track of all those. And then I also keep track of weekly standard deviations. So this is a 1 day standard deviation today, but on Monday it'll be a 5 day standard deviation. So I put out there what I'm looking for the week. We can go back and look at one of those, and you'll see, and the standard deviation levels. All that is basically it's the options pricing model, and the options pricing model uses the implied volatility to come up with the standard deviation levels for any option, or in this case the S&P index. And what that means is because it's a standard normal distribution, that 68.5% of the time you can expect the market to trade between one standard deviation up and one standard deviation down. And then 95.5% of the time you can expect it to trade between two standard deviations up and down, and then 99.9% of the time 3 standard deviations up and down. And you can make those time periods any time period you want. For me, these are 1 days. At the beginning of the week, I also put out a 5 day or weekly standard deviation, so you can know what to expect for the week. And there's a lot of data here, so these are fairly reliable. Of course, obviously there's extremes when the market makes more extreme moves than what you would expect, and there's a reason for that. I'm not going to get into it, but the market always makes more extreme moves than you would expect, and it doesn't price them in because there's people that are willing to take more risk on those extreme moves, and there's events that happen a lot more often than they should from a statistical standpoint. And that's just trading. I mean, and if you're long volatility when those events happen, obviously you make a fortune, and if you're short, you lose a lot. But overall, people are, when volatility gets real high, and the market prices it high, it's an attractive sell, because if volatility comes in, you make a lot of money. Not relatively quickly, but you can make a lot of money. Sure.
NASDAQ and futures are going up at the S&P.
Yeah, and I'm looking at this is the NASDAQ right here. Remember, I said that NASDAQ, if the NASDAQ closes this hour at 10 o'clock and it's above this 24, 44, 25, it will probably go to the settlement. There's a really high probability it will go to the settlement. And ES, that number was, let's go back here and see what that number was. ES, that number was 66.3475. We're trading back above that. So, and as long as we're trading in here, it's more than likely going to go back up. It's very likely, especially if we get an hourly close above here. And I have like rules for using these time fractals, and that's why a lot of times I don't necessarily make a trade, you know, until the time fractal's up, even if it's, you know, for or against me, because the time fractal can, you know, basically really tell you if you're right. And as I said, if this crosses above this time fractal right here, and this is a 480-minute time fractal, so I'm looking for the hourly to close above here, and if it does, it'll probably go up to the high side of this time period that I'm looking at. But we won't know that. We won't know that until 10 o'clock. And speaking of 10 o'clock, I don't know. Let's see. We might as well take a quick peek.
Did Rich disappear? I don't know what happened to Rich. Yeah. Hold on, let me call him. Dial Rich. Who knows?
Calling Rich.
Maybe his internet went out. I think you're offline. Well, there's only me on. You know, I mean, what I know about my experience in all this is that, and I've said this before.
Danny,
Oh, there you are. My experience is that
did you get me back on there?
you're back on, yeah.
Yeah, you know what I did? I went to click to see what was on the you know, coming up, if we had any 10 o'clock numbers, and I clicked on the tab for the room instead of a separate opening a new tab. So I kicked myself out. Sorry about that. Let me get my charts back up. I'll get them back up. Anyway, you continue on. Let's see what we do here.
I mean, this is probably unlike other times, you know, but generally, I always have a rule that, you know, on these quad witches, that you're busy in the first hour and the last hour. That's the two busiest hours of the day, with the last hour being the highest volume hour of the day, and the final print's the highest volume of the day.
There we go.
Yeah.
So I'm back. Sorry about that. I get in a hurry and forget to change tabs. As I say, I just wanted to see if we had any 10 o'clock numbers this morning, and we don't.
All right, so we dip back down. The futures, both futures dip back down. You're going to be.
Well, as I said before to Danny, I'm waiting till 10 o'clock to see where the 10 o'clock settlement price is. That'll dictate whether we're going to, you know, trade back up or possibly go down and test the level below. And let's see if they got this. I looked at the CBOE. I didn't see the SOQ yet, and I don't see it here in the on this page yet either. But it's it should be coming soon. And Danny, you still there?
Yeah.
So you see the spread. If you'd held right now and been short the spread and still hadn't covered your June, you'd still be making money.
Yeah.
More money, and that's.
So we're officially waiting for the March settlement price, right?
Yeah, I'm waiting for for the official March settlement, and I usually, but this time it's been 21 minutes. That's almost a little late. It seems like.
Yeah, well, that's what I said. We used to have to wait. Sometimes you'd have to wait for.
The Nasdaq is one you have to wait for longer. Usually, let's go look at that. I'll just try to see if we got it up in the Nasdaq. The Nasdaq already got their settlement. You can see right here. There's the settlement. The Nasdaq settled at 24,291.78. And I don't know what that is from yesterday. I have to look and see where that is. The SPOO. Let's see. Make sure that's not in there. No, it's. No, they don't have it here yet. As soon as they have it here, there'll be a little. You see the Nasdaq settlement, that little green point right there. That's the final settlement in the Nasdaq. So and here's a perfect example. So that final settlement is 24,291.78. And the open here is showing 24,257.56. So so what did I just say? 24,291. And this the cash open that everybody, this is what you normally see, this 24,257, but the actual open was like in the Nasdaq, 35 points higher or so than what this open was showing here. And which is what I said. I thought that the SPOO would do the same thing. They're going to show a higher opening price than what this opening price is. And there's a reason why I thought that. And basically it's because although we were opening lower, it was still opening higher than where it had been trading a little bit earlier. So like that last few minutes of the trade, the market actually pushed up a little bit. And when that happens, right before the opening, it tends to make those opening prices a little bit higher. So that's what happened in the Nasdaq. And as I said, that's what I was assuming was going to happen in the EFs. So if that happens, it means that if you did short the spread, in the case of the Nasdaq, you can, when that spread went off in the Nasdaq, you can add like 40 points to what you're making. And in the SPOO, we will soon know. I mean, I've seen some crazy stuff in the SPOO before, but I can't believe they're not open yet. But they'll have an opening print sometime soon. So right now, it's actually been a pretty tight opening range. The way I view things. This is actually a really tight opening range. It's just. gonna edit this and do what I always want to do here. Edit. Let's go down here. Come on, right here. Get rid of that. Oh, I think this is. I'm going to restart this. The other thing is when this stuff is trading on these expirations, the keys get so many orders in there. Sometimes I got to change servers. So I'm going to change this real quick. I'll just log out, go back in. Put me on a different server. Is that I'm kind of running a little bit behind there. There you go. Plus, I was running some other stuff, and that always slows things down. Come on. The charts soak up a lot of memory because I keep a lot of charts. Come on.
NASDAQ right now.
Yeah. As soon as I get this. Oh, come on, save. I didn't have that much open. I suppose I should turn off some of my spreadsheets. There we go. Let's get that back up. There we go.
Closing in on the Globex low in the S&P.
Yeah. I'll see that in a minute.
Just traded it. But I know.
Yeah, I can. One second. Let me get this open range put in here. And this is right here. What do we got here? That's. Oh, so we opened on the high here so far, and then this is. See what this is right there. Oh, that's 50. I should take this down. Let's edit this. Edit. Right there. So just as I was saying like a while ago, closing below here, below this level was negative, and they went down right away down to here. If this one SD doesn't hold, they're going to fall down into here someplace. Because they didn't get up here and close up there. Oh, so you want to see crude, Danny?
Yeah.
By the way, my crude, because I buy a lot of data, but I don't actively trade crude. So my data, to keep my data costs down, I get delayed quotes, and crude is one of the things I get delayed quotes for. But I have it all. Crude, let's go here. I think I had a crude chart up in here a little bit ago. Oh, here it is, right here. Go here and do this. Let me remove this. MACD. Come on. Oh, this is a monthly crude. No wonder. Let's look at that. Let's go to a daily, or let's go to a 60 minute and see what we got going there. Well, I'm showing that it's trading and I guess we could look at a specific contract. Let's look at I think April or May is probably the lead month now. Let's look at that. April J26. It traded down. I know last night it did trade down to like 92 something, and now we're back up at 96, 97. So it's back up 5, and I don't know. I think it settled up in there someplace yesterday. I'd have to look. But obviously when crude goes up, the market goes down. So
gold's been going down too.
Pardon me?
Crude up, gold down.
Oh yeah. Let's see if they ever got this ES settlement price. They still don't have an ES settlement price. That's kind of unusual. So they're usually really good about posting that pretty quickly. I have to look someplace else in a little bit. So I can go back to the CBOE index settlement, see if we got it in here yet.
They still haven't put it up yet?
I don't have it there.
How do you get it on the CME?
I'm looking at the CBOE index settlement values. Yeah, the CBOE doesn't have the setup. Like when you look at the CBOE website, if you go there, there's the March settlements. They have the February settlements, and you can see that like there was the February set, 68.40. So, they do a monthly on the SPX, but the SPX and the E-mini SP, it's the SPX cash that they settle to. So. Right. It's even the CBOE doesn't have it up yet, which is, I mean, that's kind of unusual for like being this. If you got other stuff, I just refreshed it. It's not up yet. Not up yet. So we dipped down to right here, right to the 1 standard deviation level, almost exactly. That low is 6,600 even. My 1 standard deviation is 65.9885, and now, I mean, they could easily they could hold, or they could take it out. If they take it out, I don't have anything, until we get down here to these other gold levels, which is like 40, 45 points lower. But if in the next hour they were to get back up above this level, it's still going back up to here. So we'll see. And it's probably all crude dependent. today because that's what everybody's watching. So
Yeah.
if crude starts going down, this is going to rebound. If crude doesn't go down, then maybe we'll continue on. I mean, who's going to want to hold a position over the weekend? Unless you think, unless you think the crude's going to really spike up and you'd want to be short, or if you think that the whole thing is, going to start to resolve itself and that crude will, go down. You know, that's what we're going to have to think about later this afternoon.
Yeah.
Smarter, there's always somebody that knows. There is always somebody that knows. So you just got to kind of watch. Personally, I think I've been thinking for a long while that we've probably seen the highs, but how long it's going to take it to go back down. I mean, the problem with the straits over there is I guess they're 20 miles wide, and how can you stop somebody with a shoulder held missile in a fishing boat? I mean, it's kind of hard to detect and hard to stop. I know thing here.
So, do you trade on these days? Oh,
Do I trade on what?
Do you trade on these expiration days?
Yeah, I've been mainly swing trading though lately because I do too many things, and the other thing is I'd rather trade based on where I think the market's headed in a general direction and not trade the noise in between. And I've got 3 or 4 different things that I like to trade and follow, and so I'm kind of watching those things, and I have a general theory about what I think is going to happen. Just like I say, I think oil eventually this situation is, I don't think it's going to escalate the way everybody has been saying that it's going to escalate. And if it doesn't and it comes down, crude prices are going to start coming down.
Yeah.
If it does, obviously they're going to go up. But right now, they're holding up here in the the mid to high 90s. They're trading in this $90 area. They've ticked up over 100 a few times. But I sincerely believe that it will come to some kind of conclusion a lot sooner than what other people anticipate.
Yeah, I think the future's act weak.
Pardon me?
I said the future's act weak.
Yeah. I mean, it is a lot of uncertainty, and energy is certainly a large portion of the economy. And if energy prices are high, it makes for higher prices for everything. Thanks for higher prices for everything. Let me update this over here too. Now that I have this out. So what I do here is I look at the open range, and I have a different definition of range than most people. Let's see, edit right here, and let's get rid of this. X that and X that. Then I'll put this in. My opening range is the first 25 minutes of the trade day from 9:30 to 9:55, and there's a reason why I use that. But there, and let's do this. So there's the opening range, and it broke out and went below, and below this one SD level in the NASDAQ. It's got a lot of work to like turn around and get back up above here. I mean, and as I said before, I don't have much support if it starts going lower. I don't have much support in anything for, in the SPOO in particular for 40 or 50 points.
Yeah.
But if it turns around here and, now we're waiting for the first hour, which it comes up at 10:30, and then the next hourly bar that comes up at 11 on here to see where we're trading. So breaching this SD level here, it's definitely a weakness, and be edging up towards the highs of the day right now, and that's bearish. Let's see what we got going here. There we go. Let's go see if we've gotten the. Here's the S&P finally gave us a print, and if you remember, I said I thought it would be higher than what the close was, and here was the last trade, and here is the. This was, what is this right here? It is 65.94.63. So that SOQ, the cash opening was 65.93 half. The SOQ was 64.63. So, if you got out on the opening and made a little bit of money, this actually adds $1.13 to whatever you made, because this settlement is higher than that spread settlement. See that,
Right.
Danny? So, I mean, that's not wild. It's not wildly crazy.
Yeah, the money was made being short to June.
The money was made in short to June, but sometimes this can be, sometimes this can be a big difference. And I actually thought with the way the market was with crude oil, that they would try to do something crazy, because one of the things is of course, push this stuff around a little bit. They can do rather well. But anyway, that's the SOQ, and you can see here, as I say, the open is showing here, but the cash settlement opening this SOQ is 65.94.63, which is a little bit higher than the where the cash was showing that it opened. And that is about all I have there.
Yeah. Well, what we'll do is maybe we can come back. I think Niels is going to come in around 12 o'clock and do a presentation. And I'm going to come back and I'm going to go over, because now I got the camera set up correctly. I'm going to come back and do the Claude levels, go walk people through the Claude levels. And then we're going to come back late in the day, right?
Come back for the last hour. I'll show my my VB that I usually put out around 1:30 or 2 o'clock, and it gives an indication about where I think settlement prices are on these quarterly, PM expirations and month ends. it doesn't work as well because there's so many open strikes. But regular, daily expirations, it works a lot better. But it'll still be interesting, and we'll still take a look at it this afternoon.
Yeah. All right. Well, thanks for coming in, Rich. And,
Okay, thanks for having me, Danny.
we'll see you in a bit.
See you in a bit.